We're going to have a very, very simple tariff for some of the countries. There's so many countries you can't negotiate deals with everyone, so we'll have a straight, simple tariff of anywhere between 15 and 50%. A couple we have 15 because we haven't been getting along with those countries too well, so we just say, let's pay 50, and that's the way it is.
President Trump there suggesting no nation will get a better tariff rate than 15% as the August 1st deadline to cut a deal looms. I'm Paul Allen, live from Sydney. This is Insight, where we dive deeper into the stories that matter with crucial context and sharp analysis. Well, Asian equities are on their longest winning streak since January, on the hopes that the pact with Japan will lead to more US trade deals, including one with the European Union. Investors will also be watching today's summit in Beijing between EU leaders and China's president, their first face-to-face meeting in 2 years. It's being overshadowed, though, by trade tensions and the war in Ukraine. We'll get the view from Brussels on what could be achieved despite low expectations. We're going to be joined by Jill Craig, senior partner at Penta Group. Also, insights on how traders should be playing the fast-moving geopolitical developments with LGT bank FX and rate specialist Trang. Let's get straight to our top story. It's a tough road ahead for trade negotiators with a little over a week to go before President Trump's so-called reciprocal tariffs go into effect. Trump is continuing to play hardball, suggesting that countries still scrambling to secure a deal will not see a tariff rate lower than 15%. He's also hinted that levies on some trading partners could go as high as 50%. Trump earlier this week announced new deals with the likes of Japan and the Philippines. He's also expressed optimism on talks with the European Union. Bloomberg sources say they are progressing towards a deal that would set a 15% levy for most imports.
We've offered such a deal to the European Union, where we're in serious negotiations, and if they agree to open up the union to American businesses, then we will let them pay a lower tariff.
Well, President Xi's going to meet with top representatives from the European Union today in what will be their first in-person summit since 2023, and that really exposes the divisions between the bloc and Beijing. Let's get to our China correspondent Min Min Lo in Hong Kong. So Min Min, safe to say some pretty low expectations for the summit. What would a win look like for each side?
Yeah, the bar is very low now for any sort of concrete outcomes from this summit. And a win for China would be if they're able to tout this as a triumph in multilateralism, a sign that the EU is splitting away from the US. But that is quite unlikely to happen. You just look at the setting of this summit. It's already cut short from 2 days to 1 day. It's taking place in Beijing, even though it is supposed to be the EU's turn to host this rotating summit. That was because apparently President Xi was unwilling to travel to Brussels, so that is a bit of a snub to the EU. And there has been a number of complaints from the EU, right? The top of which is the growing trade surplus that China has with the EU that is being exacerbated by this tariff war with the United States. And it seems like China at this point is either unwilling or unable to do more to address some of those concerns. Ursula von der Leyen saying that China is weaponizing the supply chain. The restrictions when it comes to the export of rare earths has been a major issue that really spooked European businesses and European officials as well. And then there is the other second big issue, which is China's tacit support for Moscow. That's already another big sticking point. Just last week, EU officials had placed sanctions on 2 Chinese banks for supporting Moscow by providing cryptocurrency services. Another big sort of area of contention that we're not likely to see any forward movement on, given that this is likely to be quite a strategic decision from China's side. We have heard the Chinese Foreign Minister Wang Yi, according to SCMP, telling Kaja Kallas, the EU top diplomat, that China doesn't want to see Russia win that war in Ukraine because it could mean that the US would shift its entire focus to China. So this is, again, another area where we're likely to see a stalemate.
Yeah, there's certainly loads of areas of disagreement, not just what's happening in Ukraine, but also on China overcapacity, EVs as well. Is there any area of common ground that both sides can agree on?
Yeah, when I spoke to Kaya Kallas a few weeks ago, she said that one of the few areas that two sides can agree on is on climate change, and that is possibly one of the deals we can expect out of today's summit, both sides committing to perhaps lowering their carbon emissions and working towards delivering their goals ahead of the COP30 summit end of the year in Brazil. And this is still quite significant, especially given Trump has pulled out of that climate summit, Paris Agreement, and so it's still quite significant. But again, this is the only sort of point of agreement we are expecting. We're not even expecting a joint statement from both sides. The EU side likely to come up with their own version of statement, just listing their messages to China. And again, this relation, you also have to see it in the broader context of EU trying to strike a trade deal with the US as well. And that, again, complicates matters further.
All right, Bloomberg's China correspondent Min Lo. And we are hearing that meeting between Xi Jinping, Ursula von der Leyen and Antonio Costa is underway, but sort of underscoring the tension around this. There are no live cameras at that event, but we do hope to bring you some pictures of it a little bit later on. Well, trade deal optimism, meanwhile, is injecting fresh momentum into stock markets. Asia equities on their sixth session of gains now. Avril Hong's here for a closer look. Avril.
Yeah, Paul, the idea that Japan could only be hit by 15% tariffs, not only that, we could see a similar picture for the EU that's helping to roll back these recession, inflation fears and prompting the risk on. The Asia equities are on their longest winning streak since January, and even for the likes of the Kospi, which actually paired some of the gains from earlier in the session amid word that a meeting with Besson was going to be called off. Given how the baseline now seems to be 15%, any dip you're seeing in equities could actually be seen as a buy opportunity. And of course, Japan stocks continue to power ahead today. The topics are seeing those intraday record highs, and I think there's a chart we can show you, courtesy of MLive's Mark Cranfield now, that represents this positive narrative we're seeing in Japanese stocks, that the gains recently have been driven by volumes. That's just the signal that the bulls want to see, the highest trading volumes since April. Not only that, there's also the rotation story. Keep in mind that yesterday's gains were driven by the auto stocks. Today, the banks are taking charge. Let's take a look at the FX read-through as well. Indeed, the BOJ rate hike plays are coming back to the fore. Hawkish hold expected next week. Some bets coalescing around September and October. That's helping to nudge the yen ever higher against the greenback, well past the 146 level now. And indeed, the dollar is sliding. Added pressure from Lutnick comments on the Fed and how the rate should be lower ahead of the meeting next week. The euro's gains that we've been seeing in the past 12 hours or so, that could get fresh fuel if we get confirmation that their rates are going to be 15% on levies, Paul.
All right, Avril, thanks very much for that. Let's get some more on markets now with our first guest. Trung Le is FX and rate specialist at LGT Private Banking in APAC. Trung, thanks so much for joining us today. I do want to start in Europe if we can. We've got that ECB rate decision coming up. The euro's really been on a stellar run against the greenback recently. It's up about 13% year to date. How much more upside do you see here?
Well, we still see considerable upside. So our forecast is for euro-dollar to rise to 120 by the end of the year and 122 by around middle of next year. I think a lot of that support comes from the fact that, it continues to be the prime beneficiary in the FX world, at least outside from gold, from the dollar diversifications. And we continue to see, very strong demand from our client to look to express that dollar diversification strategy.
Yeah, well, speaking specifically to the meeting today, I mean, we did hear from a few ECB officials earlier this month, among them Isabel Schnabel, saying that, look, the bar for another rate cut is very high, so not expecting anything today. But what does that sort of rhetoric mean for hopes of easing in, say, September or December?
Well, I think today is pretty much done deal. You're not going to get, a rate move, and we expect that the tone will be, data dependent. I think the objective might as well from the ECB at this meeting to keep, market volatility to a minimum, and just keep its option open for September when you will have new forecast update, as well as when, hopefully there would be more clarity on the trade situation. But I mean, having said that, I think a lot of focus in the market has been in terms of the timing for the short-term central banks' actions, be it from the ECB or the Fed. Are you going to get a rate cut very soon? But I think that's maybe missing the point, because when you look at FX market, the 1 year and 2 year ahead correlations with FX, or the outlook for policy for FX, is still most important. And forecasting the short-term policy at this stage is realistically very difficult, given the ever-changing tariff scenario. And if we look ahead for 1 year, our view is that the terminal rates pricing for the Fed is probably on the high side, whereas for the ECB or even the BOJ is probably on the low side. And so that dynamic support our view for a stronger euro and also lower dollar yen.
Yeah, I know it's difficult forecasting in this era of tariff uncertainty, but I want to lead you a little deeper into the weeds there if I can, because we've got that EU-China summit today. We're not really expecting anything, and the EU's not going to escape with anything less than a 15% tariff from the US. So do you sort of look at that picture and have some concerns about growth for the EU?
I think if we get a 15% US-EU trade deal, the market would take that as positive, and you can move away from tariff and focus on the domestic policy. And on this front, given the front-loaded, German stimulus we expect, I think if anything, if you get the tariff uncertainty or the trade uncertainty out of the way, then you start to see the domestic momentum picking up in Europe, and that may as well already reflecting in the PMIs. We'll see later today.
Well, there's plenty of central bank action at the moment, and as we speak, we're hearing there's a speech being given by the RBA Governor, Michelle Bullock. Just give you some of the highlights of what she's saying. We can see her there speaking live at the moment. She's talking about a measured, gradual approach to easing, and of course the RBA surprised us all at their last meeting by not cutting when we were expecting one. So the bank remaining cautious in terms of its approach to cutting, but is this part of the reason you're quite bullish on the Aussie dollar at the moment?
Yes. So, I mean, when we look at dollar diversification, we look for a number of criteria. One is that it has to be a deep and liquid market to accommodate, the dollar diversification flow. Second, we want countries or economies with solid domestic stories, so making it less vulnerable to an uncertain, trade environment. And last but not least, we want to look at currencies where you have fiscal space and where that fiscal expansions, if needed, will not lead to the market penalized, local asset or currencies. And when you apply all those criteria, of course, euro stands out, but Aussie also stands out because you still have very low, government debt percentage of GDP. So even though, the RBA may proceed with, 1 or 2 more cuts, actually our view is, the domestic economy is resilient. If they can get, the trade tariff uncertainty out of the way, there's maybe not that, stronger incentive to cut much further. And ultimately, there will be demand for Australia assets from a dollar diversification perspective.
I'm sure there's plenty of people here in Australia that enjoy hearing those words, because the narrative on the ground here in Sydney is very much that the country's got a productivity problem, and the Treasurer Jim Chalmers has previously pointed out that if it wasn't for government spending, growth would be pretty much flat. How do you factor that into your views on the Aussie?
Well, our forecast is, 0.68, so 68 cents to the dollar, which implies, Aussie dollar upside. But again, it's a gradual process, right? We have to factor into account that, if you look at productivity, if you look at structural growth, the U.S. still stands out to some aspect. But, given that investors are still, loaded on the dollar over the past few years, the shifting of asset allocations and change in FX hedging decisions will be the more important drivers of FX than, the structural growth element.
Of course, on the other side of all of these trades, we do have the greenback. I'm just wondering if you see some ongoing weakness there, and there's a Fed meeting next week as well, and not expecting any change there either. How's your outlook for the dollar spot index?
Yeah, so our outlook, giving all together with euro, with Aussie, we look for about 4% downside in the DXY over the course of the next 12 months. And as I said, yes, we used to look at FX a lot just because of the central banks, just in rate differentials. But I think the near-term timing of central bank decision matter less. And when you look at the medium term, the outlook is still for the Fed to cut rates. What I would say is that I think it's important for 2025 and also would have implication for the years to come for investment is that when you see the breakdown of traditional asset correlations, weaker U.S. equities, lower treasury bonds and lower dollar at the same time, that does have significant implication for a client's asset allocation decision, and that features very heavily in our discussions with clients. So our recommendation has been to underweight durations beyond 10 years and also looking for dollar diversification strategies.
Well, we've got a Fed meeting next week as well, also expected to be unchanged as well, but the market's still pricing in a couple of cuts for this year. But do you have a sense the time is perhaps running out? Only 3 meetings left after this one. Are you holding on? Are you in that 2 cuts camp?
Again, timing of the cuts in the short term is incredibly difficult. But assuming for a second that we get through with a tariff range of around 15% to 20% for major trading partners, I think the 50% would be the outliers. But if you get to that scenarios, I mean, the U.S. economy is not exactly showing signs of weakness right now, and if anything, inflation pass-through from tariff starting to show up. And I think one thing that we need to be careful about is tariff is often said as a one-off effect on inflation, but if you get tariff in the way that the U.S. administration has, delivered, it can be a wave of tariff, like successive increases in tariff, and that could potentially make, inflation from tariff more persistent. And in that stage of the war, then possible that Fed may have to, delay its cuts over the coming few months.
Yeah, that seems to be a similar story for the Bank of Japan as well. Also meeting next week, also expected to hold off on tightening. But when you look at Japan, which has, inflation is stubbornly high still, are there questions around growth as well? Is there a problem perhaps looming for the BOJ?
Well, I mean, our view, into the upper house election, we have asked our clients to look through the political noise and focusing on dollar-yen downside, because we think that, fiscal policy is likely to step up, but unlikely to be material. So our base case is cash hands out, but no major consumption tax cut, perhaps beyond, food items only. And so in that scenario, and along with the U.S.-Japan trade deal, I think the BOJ can start to adopt a more hawkish tone, and the October meeting is certainly into play. If you look at Japan economy, real rates is certainly very low, and that's why I think the bias of risk to market pricing of terminal rates in Japan of just 1% or about is to the upside, and that's why we still say we still see a lot more downside to dollar yen from here.
Just before we let you go, I want to get your views on gold as well. I know you're optimistic about the price outlook there, but I am wondering, is that a dollar weakness story, or is that a no confidence vote in how the global economy is going at the moment?
I think it's a bit of both. Obviously, gold is an important safe haven asset, and when the dollar is not performing, gold is the only real safe haven out there. But I mean, our forecast is 36.50 over the next 12 months. So we look for more gold upside, but not the same speed of the rally that we have had, because at the end of the day, there has been considerable length built, across all corners of this market, be it from central banks to public and private investor. But really, the macro environment is one where it's very difficult to be bearish on gold when you have inflation risk, Fed potential dovish pivot, or even if it's delayed, and then all sort of policy uncertainty. And then last but not least, we also have easing of regulation to watch for. In February, we saw what happened to China when they allow, the insurance sector to buy gold, and now we're looking at the U.S. retirement saving as a potential catalyst.
All right, Trung Le of LGT Private Banking APAC, thanks so much for joining us with your foreign exchange insights today. Also, just want to mark that meeting that is currently taking place between President Xi Jinping of China and leaders from the European Union. We do have a brief statement from Xi saying that China and the EU should enhance cooperation. That from CCTV, which is currently at that meeting. Still to come. Tesla CEO Elon Musk warning of a few rough quarters ahead as tariff costs increase and bite into demand. We'll have that story for you next. This is Bloomberg. Here's a look at some of Tesla's top suppliers in China after CEO Elon Musk warned of a few rough quarters ahead as tariff costs increase and bite into demand. Now, this is after second quarter sales plunged 12%. That's the worst drop in at least a decade.
We probably could have a few rough quarters. I'm not saying we will, but we could. Q4, Q1, maybe Q2. But once you get to autonomy at scale in the second half of next year, certainly by the end of next year, I think I'd be surprised if Tesla's economics are not very compelling.
All right, Asia Transport reporter Danny Lee joins us now with more. So, Danny, a few rough quarters. Is either Tesla or anyone in the analyst community willing to hang some numbers on that?
Well, I think the analysts are not too surprised by this kind of downbeat sentiment that Elon Musk gave on the earnings call that ended several hours ago now. But it shouldn't be a surprise to the analyst community who've been following Tesla for many, many years now that Tesla is probably at one of its lowest ebbs in terms of falling sales, and we've got the headwinds coming up of the removal of subsidies that have benefited in the US Tesla sales, and so it is going to be a struggle. And then there's this geopolitical environment, the tariffs that could hurt its supply chain and could add high input costs. These are all things which, even for Tesla, it's not even able to really guide for the full year, and so therefore analysts have less visibility. And when we saw this second quarter performance, the kind of results that Tesla delivered were very much matching what analysts were expecting at the lowest end of the kind of performance in terms of expectations. So this is probably the worst it may get for now as the Tesla goes through this transition period of going from just an EV company to be more like an autonomous, robotic, robots-led company. But that still got pitfalls, as Elon Musk had actually warned. It's going to be difficult as it makes its transition. And right now, it's the EV side of the company which continues to drag the company down.
Yeah, so what's the plan for addressing that? I mean, you mentioned the transition that's underway, but Tesla also announced that there will be some new models on the way as well. And in terms of that hit to sales, I mean, Elon Musk's been winding down his extracurricular activities at Doge and also as a part-time commentator on European politics. Is any of that going to help?
Yeah, I think the distractions that have been caused by his involvement in politics, I think, whether it be from the board to the investors and the general analyst community, now Elon Musk has stepped back into the fray at Tesla. He's taken on a wider range of responsibilities. Now we can see how much he can do to fix things. And so when we see him, and particularly on this earnings call, talk about rolling out at pace a new affordable vehicle. Yep. Doing more on robotaxis. There still wasn't enough detail on that particularly. So I think there is still a little bit of frustration that there isn't more colour.
Okay, Asia Transport reporter Danny Lee there in Hong Kong on Tesla. In a moment, more on President Xi's meeting with EU leaders in Beijing. This is Bloomberg. Welcome back. You're watching Insight. Let's take a look at how markets in China are tracking, seeing some reasonably healthy gains here. The CSI 300 better by about 0.4%, a little bit better even in Hong Kong. Ganfeng Lithium having a good day. Class 8 shares up 9.1%. That's higher than any close since last October. Also take a look at the yuan there. We did have a stronger fixing than anticipated. The PBOC setting the fixing below 7.14 for the first time since early November, so really sending a bullish signal across its Asian peers there. Now, we do, of course, have that meeting taking place between President Xi Jinping and European Union leaders, the President of the EU Council, Antonio Costa, European Commission President Ursula von der Leyen, in somewhat of a break with tradition. No cameras at that event, but we have been hearing a few lines from it. Xi Jinping saying that China and the European Union should enhance cooperation and also strengthen communication and trust, but really only stating the obvious there at the moment. Earlier today, we also spoke with Jens Elksten, President of the EU Chamber of Commerce, about the region's growing dependence on China.
Multinational European companies, they obviously need to compete against other companies, and the way that you win in the market is to have better products at a lower price. And in many, many cases, that is here in China. So we see actually in many ways that European business is becoming not less dependent, but perhaps more dependent on China. So actually more European companies onshoring in China.
All right, let's talk a little bit more about what's at stake with the EU-China summit with Jill Craig, senior partner at Penta Group, joining us from Brussels. And Jill, that's where this meeting was meant to be held until Xi Jinping said he didn't want to travel, and now we get one day instead of two in Beijing. So that kind of set the scene, really, didn't it? The bar is pretty low in terms of expectations. What needs to come out of this summit for it to qualify as a success?
That's right. I mean, the relationship between the EU and China is definitely rather tense, and both sides have been managing down the expectations of what might come out of this summit. I think it's still important to remember that, together the EU and China represent something like a third of the world's global GDP, and certainly around 30% of global trade. They're important trading partners for each other. And therefore, it matters what happens between the EU and China in terms of not just trade, but the global geopolitics, climate action, defense and security, and technology, these kinds of topics. And so this summit is an opportunity to actually have some conversations to try and resolve not just some of those bilateral issues that exist between the EU and China, but also some of those more global issues too. As you said, there's unlikely to be a lot of decisions coming out of this summit. We're not even really expecting there to be a joint communique at the end of this meeting, which is rather unusual. But perhaps just getting together at the most senior level is a result in itself, because, as you said, Xi Jinping was supposed to do this summit in Brussels. That didn't happen. I gather his presence at this meeting today was only really confirmed on Monday. So I think it's fair to say that just getting together at the highest level for the two sides is itself something of an achievement.
Yeah, I want to dig into the areas of disagreement, the potential areas of cooperation in a moment as well. But first, I want to focus a little bit more on the optics, because everything means something in China, doesn't it? I mean, we've cut this visit in half. It's been moved. Xi Jinping only just confirmed his attendance recently. And I compare that with the recent visit of the Australian Prime Minister Anthony Albanese to China, where he was there for 6 days and got a banquet lunch with Xi Jinping. So when you look at these things, what does it tell you about the state of China-EU relations?
Well, I think it says that while there's a lot to discuss, that the summit itself won't resolve all of those things. Perhaps it opens communication channels for dialogue to continue. But there are a number of disputes, as you said, that are ongoing, and these are both economic and geopolitical, and that have somewhat eroded the trust between the two sides. And I think that says a lot. It's interesting to hear that the statement from President Xi this morning was about rebuilding that trust, because I think that's a step in the right direction that this summit is down to do.
All right, well, let's talk about rebuilding that trust. And one of the major sticking points is, as you've been alluding to, it's the EU's, concern about China's position on Russia's war in Ukraine. Until there's any meaningful change there, how does trust get rebuilt?
Well, I think it's fair to say that things have been very touchy on that front. The foreign minister of China was reported by the South China Morning Post as having said that they didn't want to have a resolution, or they didn't want Russia to lose the war, because then that would mean that the US would turn its focus on China and Asia more broadly. Indeed, just last week, the EU included two of China's financial institutions in its package of latest package of sanctions against Russia. So there's moves on both sides which don't help in building this relationship. I don't see any change in that coming soon. And of course, China denies that it is the one that is pursuing this war. And so, I think while that's the case, there'll be a limit to what can be agreed around that. And of course, lingering in the background always, you have the US presence, not at the table, but very much in the room.
Yeah, I want to talk about the US influence in a moment as well. But just to be specific about one of the strikes at the moment, also China restricting rare earths exports to the EU as well. Now, China and the US found a way around that problem, so rare earth exports have resumed to the United States. Is the EU able to extract a similar deal, or does it just simply lack the leverage at the moment?
Well, there has been an agreement on the Chinese side to fast-track export licenses for some European companies. That's what they've said, but it's still a bit unclear for which companies and how fast that fast track will be. But it's been a conciliatory move, at least in Europe's direction. In fact, the export ban on rare earths was a retaliatory move by China against the US tariffs, in which the Europeans got kind of caught up. So I think there is resolve, I think, there to try and fix that one.
Yeah, can you give us a sense of how badly EU industries are struggling in the meantime with access to those essential minerals, because it affects everything, clean energy, electric vehicles.
Yes.
So how bad is the impact?
It's bad, and it's at a time when European industry is struggling to be competitive, and therefore, it doesn't need any other trade shocks like that to get in the way. And as you say, it affects a number of industries, not least clean tech, cars, and computing and smartphones, for example. And these are, especially in the automotive sector, these are the industries which are already under threat because of the US tariffs. And so it comes at a difficult moment and adds to the tension that there is between the two sides.
Ursula von der Leyen's previously said that the EU needs to de-risk its relationship with China in that sense. But obviously that's a challenging thing to do. How does that happen? And in the short term, how can EU governments offer assistance to industries in a way that doesn't risk offending China even more?
Well, that I think there's no incentive on either side of this relationship to make things worse. I think they're trying to find some solutions. I think part of the issue is that because China has resolved some of its tariff issues with the US, or at least come to some temporary arrangement, there's less incentive for China to make concessions elsewhere. And so, the fact that that's the sort of lingering background. I mean, when we were coming into this summit, it's fair to say, or since the US president was re-elected, that there was an expectation that the EU and China would work more closely together, not least to counterbalance the weight of the US. And although we haven't really seen that in practice, there have been some small concessions, particularly on the Chinese side, to make the relationship better. They lifted some sanctions on some members of the European Parliament, for example, which had been in place for some years. They have made statements, very positive statements about this summit in advance of it. And so, I think that there is an attempt to not make this any worse than it has to be.
Jill, you put it very well earlier when you said that the US may not be attending these talks between China and the EU, but is very much in the room. Which side could expect to enjoy more support from the US under the current circumstances? Because normally you'd say it would be the European Union as allies, but under these circumstances we can't be so sure.
No, indeed. And I think that that is one of the asks on the Chinese side going into this summit, is that the EU doesn't move closer to some kind of transatlantic deal which would close out Chinese imports or imports to the EU, particularly for its electric vehicles. And on the EU side, of course, the challenge there is for now that the US market has been closed somewhat to Chinese exports. The fear is in the EU that a number of goods and products will be dumped cheaply in the EU, and therefore, again, another stress to the competitiveness of EU industry. And therefore, there's a sort of mutual reason not to upset the US, and especially this week, given that it's, trade deadline day is the 1st of August, that's next week. There's no incentive really for either side to make this situation worse in the week before, or to, anger the US in the week before that trade deadline.
Look, if you were putting money on it, who would you bet on reaching a trade deal with the US first? Would it be the EU or China?
That's a tough one. Well, I think the EU is working very, very hard to get a trade deal. They're certainly lining up some retaliation moves in case that doesn't happen next week. Famously, Donald Trump is not a big fan of the EU, so that puts a bit of added pressure. I think that they may well move sort of in parallel. I think, we're moving into this sort of multipolar world where actually you can't just deal with one bloc the size of China or bloc the size of the EU without expecting there to be some impact on the rest of the world. And so, yeah, I think there might be a sort of parallel move.
Well, in terms of de-risking and diversifying, the EU was in Japan before they arrived in China as well. To what degree can the EU negotiate deals and agreements with other countries and allies to fill the voids, well, temporarily at least, that's been created by China's relations?
Well, it is already doing that. There's quite a few free trade agreement negotiations going on, not least with Southeast Asia. We're expecting the EU-Australia bilaterals to reopen. And I think it's really important to stress from the EU side that exactly that given the pressure on the US, that there will actually be more done with the rest of the world. Famously, the EU has had a long-running agreement with South America and the Mercosur region. That deal is still to be done, finalized, but it's getting closer now than it has been for a long time. And therefore, I think it's fair to say that the EU is trying very hard to maximize its relationships elsewhere.
Well, I'm going to try very hard to end on a note of encouragement. Climate change, is that something that at least the EU and China might be able to agree on this trip?
Well, there's certainly a lot of prep that needs to be done before the UN's COP30 in Brazil later this year. Both sides need to make some commitments by November on that. So it definitely is an issue which they ought to be able to find something to talk about. And I'm sure that China would like to see that more than the EU. I understand that the EU has refused to sign any kind of joint statement on that unless China has agreed to actually make some commitments on increasing its emission reductions. So, again, another area of tense negotiation because I think both sides actually are quite close on agreeing some of those things, but it's the optics of whether or not the EU can afford to be seen endorsing Chinese action on that at this point or not, and risk its relationship with the US.
All right, Jill Craig, we'll have to leave it there. Thanks so much for joining us. Jill Craig is Senior Partner at Penta Group. And staying on trade, the Philippines says it still aims to further lower President Trump's 19% tariff. The rate was set following President Marcos's visit to Washington earlier this week. And the Philippine ambassador to the US, Jose Manuel Romualdez, told us the details of the agreement are still being fine-tuned.
I would say that is a start. There's still time for us to be able to get some more details on how we can manage to bring it perhaps a little much lower than that. We're still looking at the possibility, but also the details on the no tariff for any imports coming to the Philippines. We're still looking at. There are so many details that were not discussed. So the discussion with President Trump and President Marcos was mostly on the overall picture of on the tariff, but nothing came on the details, and that'll have to be discussed by our negotiators.
So 19% might not be final, Ambassador. I'm just wondering what's the ideal situation? How low do you think Philippines can go, or is at least aiming for, in order to stay competitive with other ASEAN nations?
Well, there was an announcement that came out of the White House today. I think that I think President Trump said that the lowest he will go is 15%. So obviously, all countries are going to try to get to that point, a 15% tariff. So obviously, we'd like to see that happen to our trade agreement with the United States. Japan, I think, got the 15%. Tariff rate, and that's because they have a $600 billion commitment to invest in the United States. So we don't have anything like that. But just nonetheless, we're still looking at the possibility of bringing that lower since we still have time to negotiate this.
Was there ever a discussion about rules of origin or transshipment concerns? Ambassador, because there has been some concerns that, there could be some goods that are coming from China, for example, through Southeast Asia nations, which we have seen in that Vietnam deal with the U.S. as well. I'm just wondering, were those discussions ever made?
Well, we assured, we don't have any of that. There's no transshipment coming through the Philippines, and that's the reason why our trade is somewhere between 4.8 to 5 billion. So there's absolutely no transshipment that's being done in the Philippines right now.
Philippine ambassador to the US, Jose Manuel Romualdez, speaking with Bloomberg's Yvonne Mann. Let's take a look at Indian markets before we head to the break. We've just had India open for trade at the moment. A little bit of a risk-off sentiment at the moment comparing to some of the gains that we've seen across the broader region. We are seeing Tata Consumer shares gaining as much as 4%, though. That's the biggest gain we've seen for Tata Consumer since April the 2nd. Also hearing that Bangalore International Airport is going to plan the release of a bond as well. Indian energy exchange shares, though, dropping in pre-market trading. We're seeing most of those major indexes a little bit softer. This is Bloomberg. Welcome back. You're watching Insight. President Trump has signed executive orders to boost AI development in the US by loosening regulations and growing energy supplies for data centers. Measures will address energy and permit issuances for infrastructure, promotion of AI exports, and a call for models procured by the government to be neutral and unbiased.
America is the country that started the AI race, and as President of the United States, I'm here today to declare that America is going to win it. We're going to work hard. We're going to win it.
We also heard from AMD CEO Lisa Su at the same AI event with Trump. She told us Trump's AI plan is crucial to ensuring access to resources.
And absolutely helps this notion of bringing up the resources that are necessary, whether it's regulatory or power or, just ensuring that there's a view that this is a priority. And if it's a priority for the administration, it'll be a priority for the industry. And, it kind of coalesces all of the aspects that are necessary. So it's still hard work. I don't want to say that, we can do this, quickly. It's still multi-years.
But you will move some chips from Arizona this year, I think you said.
Absolutely. We're going to start manufacturing this year, and we're going to add to it as we go forward. One
of the things you addressed on stage was the idea of the relative price comparison for a semiconductor made here in the United States versus abroad. There is a marginal degree of greater expense. I think you said it was less than 20%, more than 5%, somewhere high double digits. But if you are building the broader high-performance compute system in the United States, does it matter? I mean, how do you approach the sort of economics of it?
I think the economics of it are we have to consider the just resiliency in the supply chain. I think we learned that, frankly, Ed, from the pandemic. The idea that you think about your supply chains not just by the lowest cost, but also about reliability, about resiliency, and all those things. I think that's how we're thinking about U.S. manufacturing. And yes, it will be a little bit more expensive. Frankly, some of the work that has been done to encourage semiconductor investment has been helpful. But when you really average it across everything else that you need to build this computing infrastructure, I think it's a very good investment for us to make to assure that we have American manufacturing and resiliency.
The AI action plan will be followed by action, one imagines, executive orders from the president and other pieces of specific policy. What is left to do, to your mind? What is it actually that needs to be enacted, either from a supply chain point of view or your ability to sell your technologies around the world?
Well, what I really like about the AI action plan is I actually believe it's quite actionable. So there are lots of things in there where when we look at it, it's a perfect blueprint for public-private partnership. And, we're going to be active with the administration to try to help shape some of those conversations about, what should be exported, what an open ecosystem looks like, how do we ensure that AI for science is front of mind. We're very active with the Department of Energy on, the entire national lab infrastructure, which can really help accelerate AI in the country. So, yeah, we're ready to go.
That's AMD CEO Lisa Su speaking to Bloomberg's Ed Ludlow. Well, the European Central Bank's likely to keep its key rate unchanged at 2% today. This is going to be its final decision before a 7-week summer break. Policymakers are putting off a response as they wait for some clarity surrounding Europe's trade relations with the US. In June, ECB President Christine Lagarde says they were nearing the end of the easing cycle. All right, that is it for Inside Horizons Middle East and Africa. Coming up next, this is Bloomberg.